Welcome to Market Movers. I'm Jim Urio, and today we're talking about my favorite day of the month, and that's Payrolls Friday. This week we're looking at using weekly E-mini S&P 500 as a means of hedging portfolio risk or creating exposure to this event. Scott, we talk about this event-driven volatility, and this is the crown jewel event-driven volatility. Do you think because of what happened with the Trump administration last week, the fact they didn't get their first piece of policy through, do you think these numbers matter more because now we're going to kind of look at the old way?
I think they matter more than they ever have, and that's because we're getting further into this presidency. I mean, you mentioned the non-farm payrolls coming up, my favorite day of the month as well, because this is the second full month in which we'll have a respective view of what the Trump policies possibly have done to the job market.
And I agree with you. I think that these are more important than they were before because I think now we wonder, are we actually going to pass new pro-growth strategies or not? Now, before we dive into our trade discussions, I'd like to point out that with all market movers, it's important to view these trades as examples that allow you to see different ways to use futures and options products to manage risks or create additional trade opportunities, not as trade recommendations. Prices and movements are going to vary. Right now, we are pricing this out. The June contract is $23.63. Scott.
Yes, so we saw a little bit of a pullback into the end of March, maybe some profit taking, maybe some repositioning coming into the big month of April, which I think is going to be a really big month for the markets ahead. And so I still don't believe in some of the action this week, Jim, that the bulls are back. And it's a lot harder to be short this market or let's say be on the sidelines given all the cash that's out there. So I'm looking at punching up a call spread today, specifically the 2380-2400 call spread. This expires on April 12th. So you get some time to digest, as you like to do, my friend, the economic data piece. It's going to cost you about 4 ticks because I priced this thing out at about 2370. So it's going to risk the 200 that it's going to cost you to put the spread on to make a potential 800 if it fills it out by the 12th.
I actually like it quite a bit, and
Thanks.
the one I'm about to give, and we don't compare notes ahead of time, is very eerily similar to that. I'm looking at buying the Wednesday expiry, the April 12th, because as you said, a lot of weird things happen after the number on Friday. I like to give the market a couple days to actually truly absorb what the effect's going to be. So the April 12th, 2390. 24.15 call spread for 2 ticks. Now, the difference between this trade and Scott's trade is that this one risks $100 to make a potential $11.50. So that bottom strike is higher up. It's less likely to happen, but if it does, it pays off bigger.
I call this the big boy call spread because you got a wide range, which is good. I mean, for sometimes when you're pricing these out at home, make sure you look at some of the costs you're going to put in, and you don't always have to hold it for the whole spread either. You can manage it around some of the price expectations that get baked in from results like the non-farm payrolls report.
Okay, lastly, non-farm payrolls report. Is it going to meet expectations? Is it going to be good?
I think we're setting up for a pretty good number. I think somewhere north of 200,000. If you look at how the markets reacted to good or better than expected economic data of late, Jim, and looking at how the markets traded around maybe the 50-day moving average, for example, into the 2,340 area, we're talking about the market responding well now to good data, especially given that the Fed's back in play.
And the ADP number, which is not always a perfect correlation, was very good.
You saw a 5-handle rally on the S&P on that.
Exactly. Thank you for joining us on Market Movers. I'm Jim Urio, where we're hoping to make you a better trader.